Thanks for tuning in to India Market Close, and it's looked iffy today, and maybe for the right reasons as well. We were talking about it on the trade setup this morning that there are enough reasons for the markets to be a bit worried. This is not a dramatic fall, by the way. This can get changed in a day as well, as we saw with the US markets yesterday, at least the Nasdaq and the S&P, wherein the reversal was pretty swift too. And for our markets too, we've seen reversals happen every time. But just that the markets are trading at life highs gave enough ammo to people who wanted to short early in the morning and make some money. For now, they're in the money for sure. Bring up the mid caps and the small caps and just see whether they have reacted as adversely. Obviously, they started off flat. The mid cap index and the small cap index, both of them started flat, and the small caps are still flat, which brings me to the advanced decline ratio for a brief moment, and may not be as bad. Yes, not as bad, just about 1:2. So it's not dramatically bad in the markets in the session today. The small cap index is certainly holding out. Bring up the heat map and show you what's moving and what's not on Nifty. Remember when we started off, there were about 10-12 stocks in the green. There's still about 7-8 stocks in the green. So a lot of red, very little green. That is the key thing. What's standing out? Divi's about 1.25% higher. Tata Motors, Bajaj Auto, again a couple of stocks participating in NTPC is cooled off from the highs of the day, but still in the green. What's not done well? On specific news, Sun Pharma, the top loser, down about 4%, and Pharma has had a bit of an iffy day today. Laurus, etc., and all of them are down. But Sun Pharma on specific news around an FDA inspection outcome. So maybe that's dragging the stock. Maruti, again, maybe the inventories, maybe something else, maybe just profit booking after a really strong rally. So that's corrected a little bit. There is some weakness in metals selectively in the session today as well, while they've enjoyed a good run. In today's session, JSW Steel about 1.5% or nearly 2% lower. So that's not had a very good run in trade. And Hindalco is down about 0.5% as well or thereabouts. So that one too is a bit of an issue. And before I hand it over to Tamanna, just broadly, it's just a bit of a corrective move that's happened, not in too many heavyweights, which is actually the good part, because if you look at the top 10 losers, there is no Reliance, there is no HDFC Bank, and that's a bit of a respite, because otherwise the headline cuts could have been very high if either of those two were down about a couple of percentage points. But the broader market's much well behaved, Tamanna.
Relatively, yes, but I think the mood is a bit somber. Could be a couple of things, Niraj, as we were talking. Could be FIs now waking up in the afternoon and figuring out what's happening with the Mauritius story. I just want to pull up, the sectoral indices to give you a sense what's hurting the most. And it's a bad day for pharma specifically. And there you have the pharma Nifty down with the deepest cuts, about 1.5%, followed by FMCG, etc. All of it not doing too great. Even the banking pack, Bank Nifty also not having a great day, about 0.75% down. In terms of individual names, and just to give you a sense of what was working through the day and what were the big sort of stories through the day, Bharti Hexacom is one I'll pull up. It's a new listing, and it listed at a premium of about 32-33% as was expected. It's trending higher, so it's been a pretty good day. About 570 was the issue price, so at least Bharti Hexacom is having a good day on day one, which shows that it was, it's one of the largest IPOs at least this year, this calendar year. So inherently strong because this market mood hasn't impacted it. Entero Healthcare was another standout kind of a stock, and that's because of a Jefferies note. They've initiated coverage and they see a 50% upside on Entero Healthcare. That's one stock which has been working very, very well. I don't know if we can pull up the line chart for it as well and just see what the day has been like. But this is one that has definitely been seeing a superb day. All right, let's talk about Metropolis. Metropolis is the other one, which is, a stock of the morning. Great business updates coming in for Metropolis. And not just the fact that their business updates are good, it's cooled off. It's cooled off from its highest levels as well. It was up about 7% on opening, now up about 3%, so given up some of its gains. Their expansion plans are good. They plan to increase their rates in their B2C segment as well. So Metropolis is having a pretty good day and staying steady in an otherwise iffy kind of a market because of those expansion plans. A clutch of other pharma stocks, some good, some bad, and a Goldman Sachs note is responsible for some of it. So I'm going to pull up Newland up on the positive side because of this Goldman Sachs note, up about 8%. On the other end of the spectrum is Laurus, which didn't see too much of a thumbs up. In fact, quite a negative outlook from Goldman. So that's about 3.5% down. That's also improved a bit from the kind of tally that it saw. Vodafone is the other one that I would pull up. We reported first that the FPO of 18,000 crores would be on the anvil. That's, that notification is out. But it's the range. The floor price is about 10, upper end is 11, 10 to 11 rupees. That stock is about 12 rupees now. That's why you've been seeing that constant beat down on a Vodafone as we speak. So these are some of the key stories that you can see through the day in the broader end of the markets. But overall, the mood is a little on the downside, isn't it, Niraj?
Yes, it is. And that is the worry. I mean, there are enough reasons for there being caution on the street. Let's see if indeed the trading view is also turning out like that. Vaishali Parekh, Vice President Technical Research, Prabhudas Lilladher joins us right now on the show with her thoughts on what the charts are suggesting. Vaishali, good afternoon. Thanks for joining in. What have you guys done as a house today in terms of telling your clients, take a bit of profits and sit on the sidelines or initiate shorts? And what would be the calls, of course, for this afternoon on the index first?
So very good afternoon and thanks for having me on the show. So yes, well, once we saw Nifty breaking 22,600 levels, we have asked our clients to exit because now we are looking at a downside of 22,500. Now that is one stock which really, that is one level which is a prominent support. So if that support breaks too, I think we may see some further selling coming in the market. And likewise, Bank Nifty for 48,400 acts as a crucial support. So Bank Nifty is still holding on well as compared to Nifty, but I would have a cautious view from here on and stock-specific movements. So that's what we are looking at.
All right. Vaishali, they're looking at that weakness coming in, and let's just take a look at some of the factors that are dragging the markets this afternoon and some of the stocks that definitely are. Just Vaishali, if you've been tracking the top loser, the Sun Pharma today doing very badly, so is a Maruti. Any take on those two specific counters?
So I guess, yes, Sun Pharma has shown signs of weakness, but we need to see a follow-up selling coming on that. So if we see a break of 1520 levels, that would really weaken the trend and we would see a downslide in this stock. As far as Maruti is concerned, well, this is the first day that we are witnessing some good selling coming in this stock. So overall, the trend has been pretty okay. But if we see a close below 12 to 200, that would be creating further panic in the stock. So yes, there is the first sign of exhaustion seen in the stock since 2 days.
Okay, let's just revisit those ones. So remember the targets. I'm just interested in our viewers knowing the targets that of the stocks that Vaishali is given. So let's pull up the Maruti plate with the target prices as well, because that arguably is one of the weak ones there. The day's low is 12,315. Sorry, Vaishali, what is the target that you gave on this one?
So I would say, well, the near-term support lies at 1220. If we see a close below that, that would trigger a further selling pressure going towards 11,500. So 1220 is 12,200 is the support level.
Okay. Point well noted. Do keep an eye out for these ones as well. We need to talk about Metropolis. I'll just do that in a moment from now once my colleague Varsha joins in. But the other aspect of the day today is Sun Pharmaceuticals. And that stock, the way it's cracked today, 4%, 4.5% now at the lowest point of the day. What do the charts suggest for this one? Because pharma otherwise has not had that bad a last 2-3 months, but this one is clearly sunk today.
I'm saying, the trend is still intact, but if 1520 levels break, then that would be calling for a downslide. So this is the first candle, and today is the first day that we are seeing this kind of weakness in the market overall. So if below 1520, it negates my view, and we can see a target of 1500 to 1480 to start with.
Okay, just to add a bit on the Sun Pharma story, Niraj, because it's a fairly important one. This is US FDA inspection at the company's Dadra facility on December 4th. They got an OAI, that's an official action indicated. What that effectively means is, and the 6 observations they've got, what it means is that they need to go back and solve the issue. Otherwise, they get an import alert or a warning letter, and that's bad news. So there is still one more step, and there is a chance for Sun Pharma to come back and resolve this issue, which surely they're working on. They will be re-inspected by the US FDA to give an all clear. This is sort of a first warning shot. Now, how important is the Dadra facility? It has a contributing revenue which accounts for about 1.5 to 1.75% of their overall business. So it's not too insignificant either, and that's maybe why you're seeing some of that pain. Now, let's come to the stock of the day, though. Metropolis, they came out with their Q4 business updates, which were fairly positive. Their expansion plans is also what is exciting the street. Varsha is joining us with more.
Well, thanks for that. So yes, Metropolis is in focus today. If you see, volumes are over 7x is 30-day average, while our stock has seen intraday high of 7%. Now, this is on the back of company reporting Q4 FY24 business update and company achieving debt-free status. Well, speaking about business update, if you see, core business revenue is up 15% year on year. When I say core business, it meaning it excludes revenue from COVID and COVID-allied tests. Now, core revenue growth is driven by volume, which is up 8%, and revenue per patient, which is up 7% year on year. Revenue per patient growth is largely driven by growth in specialty tests, premium wellness, and price increase. If you see their B2C revenues, that is business to consumer, is up 18% year on year. The company's target is for 60 to 65% revenue contribution from B2C as compared to 53% which was in Q3 FY24. Now, company repaid debt in quarter, resulting in a debt-free status as of March 24. The gross debt of the company was 12.7 crore as of December 2023, while cash and cash equivalents were rupees 89 crore. Now, speaking about the expansion plans for the company plans to add 30 labs in FY25, and effective from Jan 24, the company implemented a price increase in the B2C segment across India, which will result in increased revenue and margins in Q4 FY24 and FY25. Now, the company is planning a price increase in B2B segment as well, specifically for specialized and super specialized tests in Q1 FY25, which will further boost revenue and margin profile. And lastly, if you see, company is expecting EBITDA margins of 26 to 27% until FY25.
Very quick take from Vaishali on Metropolis, and as you can see, it's off its day's highs, but still about 3% up. Do you think there's a fresh up move in the anvil for the stock?
Well, what we need to see is that the stock needs to sustain about today's high. So if we see that, that would also give a breakout on the weekly chart. So I would say, well, 1750 was the breakout level, and that's where we are right now. But also for a 200 period to cross, we need to see the stock moving about 1940 levels. That would confirm a further uptrend. Till then, we could see some resistance.
Okay. We take a quick break. Vaishali, stay on, so much more to talk about. And we talk about some of the other key movers in the session today. Chakri, Lokapriya joins on the other side as well. Entero Healthcare is active. There are some of the other PSUs which are not doing too badly as well. We'll talk about some of those on the other side. Stay tuned. Back with India Market Close right here on NDTV Profit. Let's welcome in Chakri, Lokapriya, Managing Partner, Red Strawberry, who joins us on the show. Chakri, great having you. Thanks for taking the time out and being with us. Just before we joined on the show, we were talking about the weakness today in markets, in pharmaceuticals, etc. Just this market weakness, Chakri, is it the global factors that are hurting, or do you reckon the India-Mauritius tax tweak also has a large part to play?
Good afternoon. Thanks for having me. Yes, I think partly it's because of the Mauritius unwind trade, which does have a factor, so that is one factor. Second is, of course, the global. There is now a divergence between what the US does, which is keeping interest rates high, EU, which is now succumbing to the fact that it has to lower interest rates. And, this kind of divergence will kind of impact all kinds of importers in India, because, you'll have the rupee kind of depreciating versus the dollar if this event unfolds. And that kind of, puts pressures in certain pockets of the markets. I think it's a combination of various things which is leading to today's fall.
Okay. Well, clearly pressure out there. The only key point is that whether this can worsen or not. So, Chakri, do you reckon that there is more downside? Because a lot of things that we're speaking about, which is indeed the Fed rate cuts getting pushed out, for example, or higher commodities, are probably not just a one-day event.
Higher commodities are not clearly a one-day event. But if you look at the Nifty, if you look at any of the fundamentals of all the metal companies, they will actually, if interest rates cuts are kind of pushed out globally, outside, because in the US, then it kind of hurts their outlook. And on the other hand, if EU starts cutting rates, they benefit from the outlook. So it's kind of a very muddied picture where it leaves India, whether they cannot cut rates. But valuations are low for metal companies, demand is picking up, and therefore you think, those companies are okay placed.
Chakri, good afternoon. Tamanna here as well. Just wanted to get your sense of the kind of selling that we're seeing today. And we saw a sharp rebound on Thursday's trade in US markets. That data about high inflation rates got digested fairly quickly. Markets now assuming that your rate cut's not going to happen in June. Do you see this bout of pain as also being short-lived?
Yeah, it probably is, as far as India is concerned. Simply because, if you look at the companies, I keep talking about this new India in terms of the new companies, new sectors which are benefiting from the surge that you're seeing in the corporate in industrial activity in India. So, their earnings are growing very strong, which is whether it's industrial capex, infrastructure, power, even chemicals to an extent, but of course, that has a big export component. Now, all these sectors are benefiting, railways, defense. So I think, given all this, they'll provide support to the fundamental earnings projection for the year and beyond.
Another sector that's in focus is auto, and specifically Maruti. Maruti is one of the top losers on the Nifty today. Could be a bit of a pullback, but there could be another fundamental reason as well. And Puneet is joining us for that detail. Puneet, now we've seen the sales numbers, we saw the FADA numbers, but you're saying there's more incisive cuts of that data, which is giving us an idea why Maruti could be suffering today?
Yeah, that's definitely right, Tamanna. So what we've done is we've taken the data from January to March of the FADA retails. Now, these are retails basically that we register the cars which you and I might buy, and those numbers get registered at FADA, which is the Federation of Automotive Dealer Association of India. Now, we've compared those numbers with the numbers that Maruti, for example, in this case, reports in their exchange filing on the 1st of every month. So we've taken this data compared from January 2024 to the March ending of 31st. Now, when we look at the data, we see that the total FADA retails, which are the vehicles basically bought and registered, are roughly at 4,30,000, while as the monthly wholesale, which the company reports on the first of every month and which is given to dealers, is at 5,80,000. So the difference, which is 1,53,000, roughly 1,53,000, is the inventory which is kept with the dealers for the next month going forward. Now this is a little worrying picture compared to previous year, when the retails from FADA were roughly 4,11,000, which and the monthly difference was coming into roughly around 1,03,000. So compared to previous year, the retails have gone up roughly 48,000. So this time the inventory is roughly 1,50,000 and previous year it was roughly 1,00,000. So what could be one of the reasons that this inventory has been built up going into April and FY25? Now the first reason is that the festivals have shifted from March to April, which is basically Gudi Padwa as well as Navratri, which both started on the 9th of April. Now mostly around these festivals is when the people try to plan their purchase for the Shubh Muhurat. So we see a lot of sales in the smaller cars, in the smaller CC bikes as well as CVs. So this could be one of the reasons that they have carried on a little bit of excess inventory. While we had the FADA president which also said the SUV sales are doing good, small car PVs could be a concern. And this is the inventory that could potentially be built up. So that's what we've looked at the numbers, and this is the number that we feel the inventory of roughly 1,50,000 going into FY25 could be a little bit of a concern. Back to you.
Okay, but no, Puneet, back to you, because we'd love to understand about the big T, which is Tesla, coming to India and the impact that it can potentially have on some of the auto anchors.
Yeah, that's right, Niraj. So based on the new EV, firstly on the tweet itself, which has taken X or the erstwhile Twitter on fire, that he's coming in to meet PM Modi. Now this could also potentially, there are some reports they could be scouring for the manufacturing facilities in India. But based on the new India EV policy, which says on localization of 50% in the first 5 years of manufacturing, we just looked at what could be the potential winners in the auto component space. So we have looked at Sona BLW as the first one. The company already has 28% of its revenue coming from the EV space, and this could be a beneficiary going forward with these new India EV policies. Sansera Engineering is the second one that we're tracking. It has roughly 18% of its revenue coming from the EV space, and this could increase potentially going forward as well. Motherson Sumi, the legacy auto component maker, currently has roughly 21% of its revenue coming from India, but seeing concerns in the Europe and the America market, entry of the likes of Tesla in India could give a big boost to its India revenues. Varroc Engineering is the fourth one that we're tracking. Now the new EV orders will increase it compared with the industry. That's what the company said in its last con call. And they also said that the content remains 5 to 6 times higher for supplying to EVs compared to ICE vehicles for them personally. Endurance Tech is the fifth stock that we're tracking. It currently has roughly 8.5% of its order book in the EV space, and this could increase going forward. And the last two companies, SKF, which is a bearings company, do know a very, very big insight that the company gave, that for EVs, they require lesser bearings. So for example, if ICE vehicle needed 10 bearings, EVs need only 7, but the revenue won't be affected as the EV bearing products are higher price compared to ICE. So this is one of the stocks that we thought could be beneficiary of the EVs. And finally, Uno Minda, the company has roughly 49% of its revenue in the four-wheeler space and has no exposure to these global OEMs. They've also signed a groundbreaking ceremony today for their passenger vehicle alloy wheel plant, and going forward this could be a key beneficiary as well. So those are just a few of 6 to 7 stocks that we thought could benefit from the entry of the likes of Tesla in India.
Okay, thanks a lot for that, Puneet. Well, that's while Nifty Auto is sulking, some of the auto anchors have certainly done well. Now, Chakri, I'll first come to you. It's still a matter of conjecture who will get orders, etc. But suffice to say, the ecosystem players ecosystem stocks are excited today. Have you done some study on who could potentially benefit out of this?
Indeed, I think Minda, you mentioned Timken and bearing company. These companies will clearly benefit. If you look at Minda, it has telematics, which again, from cars which are imported into India, they import the local component that needs to be added to an imported car. There, Inamdar can play its role. Of course, in alloy wheels, of course, it'll benefit from both, all kinds of vehicles. Timken, on the other hand, is a bearings company. It benefits not just from automotive, but let's stick to automotive bearing demand. Will benefit from that. It's one of the leaders in the space, cutting edge technology and all that good stuff. On the other hand, it will also benefit from industrial growth, who also require bearings. So, these are a couple of companies, the bearing space and the EV telematics space, I think look good within the ancillary.
So have you picked out which Tesla you're going to buy, Chakri? Because I know Niraj has already shortlisted his.
I think we should. I think we should all block book for S class, right? Or was that X? Not X. X is the lower one. S is the higher one.
Okay.
Yeah.
Oh, is that so? Sorry, I'm not aware about these things.
Now we will research and figure out which one we want to get.
I can afford a tire of a Tesla. The whole car might be a bit difficult.
No, I was just thinking about it the other day. What is so exciting about the Tesla is how intelligent that car is at navigating everything, self-parking. How would that work in a city like Mumbai or Bengaluru, for that matter? I don't know what that Tesla would do.
Yeah. So I mean, to be fair, we now have some options like that, but clearly not quite built to suit for Indian roads for sure, and Indian occupation. But I remember one of the incidents in Mumbai wherein the car happened to graze by the side. But be that as it may, the ecosystem players, Tamanna, will certainly benefit.
Yeah, definitely.
You forgot Vaishali. Maybe she's buying a Tesla.
Vaishali, have you picked out the Tesla that is on your wish list?
Well, that's my husband's job. I just enjoy the cars that he gives me. I'm not doing it.
Are you picking the right stocks for your husband to make that money, Vaishali? Which within the auto component universe?
So, well, I had bought Tata Motors. I had Force Motors. So, yes, pretty good.
Okay. And within Sona BLW or Samvardhana or Uno Minda, anything that looks exciting, because some of these stocks are active today?
Uno Minda, yes, I had recommended to my clients because, well, technically we had seen a good base formation at 620. And from there on, we had recommended, and I still continue to have a positive bias. So 710 acts as a good support level, and that is what one needs to look at, because if I'm looking at the weekly chart and the monthly chart, I think this stock is quite well poised for a target of 800 plus.
Okay. Well, that's the long and short on the autos. What we'll do is take a quick break. One tilt towards TCS as the numbers come out in about 45 minutes from now. So a preview of what's to be anticipated. And of course, maybe the derivative data around TCS as well. So stay tuned.
All right, quite a few stories that are breaking right now that we need to talk about. One is definitely Vodafone. Now we have details of the RHP which says that the FPO proceeds will be used for infrastructure and spectrum dues. Now, which spectrum dues are they referring to? Are they referring to the ones that they owe the government that sort of time is lapsing? The holiday that they had from that is lapsing. So, yeah, so that's going to hurt. Having said that, it's off its day's lows. We're also getting details of what kind of investments Vodafone may be seeing.
Yeah, that's quite. I mean, they've given out the first set of numbers, but these numbers seem to be low, to be honest. 12,750 crores because it'll take much more than that. But maybe they're talking about the FPO proceeds, and therefore a part of the FPO proceeds to be that once they raise debt.
So they have 18,000 crores is what they're raising. So I suppose out of that
12,000 crores is for this.
Yeah, so 2,000 odd crores for repayment. The remaining about 12,000 odd crores, I think, for setting up 4G and 5G services. You're right, that's going to be maybe not nearly enough to make a dent in the whole market, definitely. But just a quick look at the markets before we get to Smriti for more details on what's happening on Vodafone as well, where you're seeing stocks like Sun Pharma and Maruti continuing to completely sulk. Cipla also now joining that bad mood of sorts, as is Power Grid and Titan. Yeah, so we'll get you more on the Vodafone story, but meanwhile, let me go across to Agam with the FNOQs. Agam, can you spot when the market's mood has soured, and is that reflecting on your side of things as well?
It certainly is, and largely, if I can categorize this as a bout of profit taking, because remember that we had a reasonably steady week, before, of course, the holiday that was yesterday, and today it does seem like we're looking at a bit of profit taking. Of course, the Nifty is still holding on to 22,500. Remember that until yesterday, we also had seen a significant shift of a lot of writing of puts on the higher end. But that said, today we're looking at unwinding as far as the Nifty futures go. Of course, a lot of that is pulling off the profits off the table. The Bank Nifty is also where we are seeing a little bit of unwinding, maybe 2% decline there as well, even as the index comes off by around 0.8%. Now, in terms of your overall options market, what we are seeing is a little bit of a writing around 22,800, 22,900 calls coming through. Even in terms of your overall open interest, we are still seeing a little bit of more writing around the 22,000, 23,000 mark in terms of calls. So that's something that we're going to keep an eye on as well. Finally, let's move on and talk about stocks. And in terms of stocks, that should come up for you on your screen. So we do have longs in Metropolis and Syngene, two strong counters. And besides that, shorts in Page Industries, Sun Pharma, as well as Maruti Suzuki. And we also have about a short covering only in our X side. But besides that, we do have a lot of unwinding for Balrampur Chini, Nalco, and Vodafone in general. Vodafone, of course, has seen a substantial recovery from its day's lows, still at around 12.8. Remember, the FPO floor price is 10 rupees per share, and that's something that we're going to continue to keep an eye on today.
Absolutely. Just the other piece, of course, Agam, on what's happening with TCS. All eyes on the numbers that will be due in a few hours from now.
So let's pull up the TCS futures snapshot and take a look at how things are faring there. We do know that TCS today has not had a terrible day of trade. What we are seeing is, a little bit of consolidation ahead of its earnings. For now, of course, it's up around 0.5%. It is holding on to the mark of 4,000 rupees per share. But here, the last line is telling. We are starting to see a little bit more positions being built up as far as TCS futures are concerned towards what it seems like is going to be fresh longs at the moment. However, this is, of course, not the only way to look at things. We also have shorts. That means on the other side of, in terms of from the counterparty point of view. But when it comes to the options market, let's pull that up. Now, the 4,000 mark is what we are going to keep an eye on. And 4,000 is exactly where you have seen calls and puts written here. What this means is that because of the fact that these particular options are at the money, well, you naturally are going to see the highest amount of Vega, which is expected to contract on Monday post earnings around this mark as well. And sometimes it just so happens that if there isn't a very sharp movement in terms of price, well, you stand to still make a gain, a considerable gain, by selling this particular pair of calls as well as puts going into an earnings session, because naturally that means that the volatility will have dropped substantially after the event has passed through. So 4,000 is something that we keep keeping an eye on, and of course on the higher end we do have substantial amount of calls written around the 4,100 mark. Remember, that's not too far away from the current market level. So well, we do have some written. It does seem like at the moment we're likely to see a range somewhere around here, but that's a wait and watch. You never know what the earnings bring us, and you never know where the price of TCS can go eventually.
Yeah, absolutely. Thank you for that, Agam. Now, we've been talking about TCS, and Rucha is now standing by with what preview is expected, the preview for the Q4 earnings. We'll, of course, hear those numbers and from the management in a few hours from now. Yes, Rucha?
Yeah, so TCS is expected to report a highest earnings sequential growth on the back of BSNL deal, and it is the only company which has announced a mega deal win this quarter. While the uncertain macro environment still prevails, the IT companies have shifted their focus from revenue growth to margin improvement, and TCS is expected to report a 130 bips improvement in its margins for the quarter 4. This is on the back of utilization of the bench strength that they have created last year by hiring a lot of freshers, and that has come to utilization, which has eventually reduced the subcontracting cost, which is an essential and expensive cost item for the Indian IT companies, and that is expected to come down as the bench utilization will happen from the fourth quarter. Also, TCS is expected to roll out its wage hike from 1st of April. However, the margin is still expected to improve on the back of strong cost control. We will watch the management commentary very closely, especially on the demand environment.
Yeah, Rucha, hi. Rucha, I was just trying to understand. So, what is the one key point that you might be thinking about, which would be the most important point from the management commentary?
I think I will look out for what are the clients still talking about on their budgets. Number one. Number two, whether the discretionary spends are reviving. Number three, what kind of deals are clients looking for? Is it cost optimization still, or is it vendor consolidation? If it is cost optimization, then the implication is that the environment is still under pressure, and still there is some way to go for IT companies to pick up.
Yeah. Thanks for that, Rucha. Thanks for bringing us that perspective. Of course, Rucha will be with us when the TCS numbers break out, so we'll talk about it then. But the big news, Vodafone Idea, we have the details of the usage of the proceeds, but more importantly, other things, including some details around who could be investing and GQG's name in the mix. Smriti, tell us, what are you learning about the usage of the proceeds and other details around the FPO?
Well, yes, good afternoon. Through sources we've picked up, there's a lot of investor interest in the 18,000 crore FPO that Vodafone Idea is going to come out. One of the names that's standing out is GQG, that is planning to subscribe to this FPO. Another name that's also coming out is Fidelity. So these are two funds that are looking to put in money through this FPO. Now, there are other investors as well, that there seem to be that sort of investor interest. Now, the company says they're going to start with their domestic roadshows. So it seems like there are some domestic investors in the fray as well. But coming to the utilization of these proceeds, out of the 18,000 crores that the company is planning to raise, it plans to use 12,750 crores towards expansion of 4G services and setting up of 5G. Now remember that Bharti and Jio both have 5G services. Vodafone Idea not so much. So these funds will be utilized towards that. Out of the out of those 18,000 crore, about 2,173 crores will be towards payment of spectrum dues. Now, remember that the company's gross debt stands somewhere at 2 lakh crore rupees, and 90% of that is owed to the government through these AGR dues. So that's where the company plans to kind of utilize these funds. And as we have reported earlier, it also it plans to increase its revenue from 40,000 crore currently to 75,000 crore by the end of FY26. But we'll bring you more as and when we get that.
Okay. Thanks for that, Smriti. So that's around Vodafone Idea, and must say the stock is significantly off from the lows of the day. It was maybe a couple of percentage points. Look at that spike that has come into Vodafone Idea. Chakri, this piece that Smriti was talking about, GQG coming in, proceeds being used for 4G, and presuming that this is just the equity part, if the debt part comes in, as it will, then it kind of gives Vodafone ammo after a really long time to make some investments. Does it alter the picture around Vodafone positively? Does it mean that the smooth runway that was believed to be existing for Jio and Bharti may not be as smooth because there will be a reasonably significant third competitor?
Now, if you look at Vodafone, it's important to understand its past and therefore its future. Now, you had a lot of its debt converted.
Fidelity is also put. Yeah, please continue.
Yes.
Please continue, Chakri.
Some of the debt that it had taken, owed to the government, which has been converted into equity. Still, it owes a lot amount of debt to the government. In this whole process, because of lack of capital, it lost market share to the other two players, which is, and then therefore now with the capital coming in with these 18,000 odd crores, some amount of debt payment and some amount towards, spectrum payments towards 5G can claw back some of the market share that it lost. So I think that's where the whole story is. And of course, big marquee investors like coming in will always be viewed upon positively. But basically, I think today it's on a firmer footing financially, balance sheet, even though it's still debt is humongous, simply because of the fact that the government's holdings have changed, their holding shapes, where it makes Vodafone in a better shape today.
Vaishali, any views on Vodafone? That spike definitely coming in. And, when you have those kind of investors who are showing some interest, at least fundamentally it bolsters, hopes for a revival of Vodafone. And that really is the big story. Is 18,000 crores going to be enough? Will they raise enough debt? All of those are questions that come next. But on the charts, what would you do with the Vodafone?
So I would really risk to buy some at least at these levels, because I'll tell you why. Vodafone has taken support of a 200-day moving average. In fact, the previous low also what we witnessed was somewhere just close to that 1175. So this makes a good support area. The view gets negated only below 11. So I would say yes, one must take a risk to buy this at these levels.
And what is the sort of target that you see it going to when you say risk to buy these levels? Is it the GQG? Is it the GQG name that's bolstering, your confidence, Vaishali, for Vodafone?
Yes, why not? And actually speaking, well, I would go only as per my technical chart reading, because that's what gives me conviction whether should I go for it or no. So at current market price 1290 and stop loss being 11, I would risk a trade for a target of at least to start with for 1450, and above 15 if it goes, then well, we are back to the green zone.
Okay, so on the charts as well, there is a case for Vodafone. Maybe what's souring today definitely is the pharma and the healthcare space. I mean, look at those two indices doing very badly, and it's not just a Sun Pharma, which has had an adverse sort of citation from the US FDA, or a Laurus Labs. Okay, there's a reason for that as well. Negative note from Goldman Sachs. But through it all, you're seeing that mood kind of change, whether it's Zydus, Abbott, Oro, DRL, all of it not looking too great. DRL at least had, maybe fundamentally positive news today. Now, I would say Newland and Syngene are the only sort of exceptions. Of course, Metropolis, but that's because of the kind of business updates they've come, news coming in on Lupin right now that the US FDA has completed inspections of their Tavasa facility with no observations. That will be seen as a bit of a positive. Chakri, wanted to get your take on the sector and any specific stocks that you're tracking over here.
It as a sector, we largely stayed away except for an odd investment in the healthcare services like Apollo hospitals, some of the hospital space, but pharmaceutical largely away, simply because there are a lot more positive earnings upgrades happening elsewhere. I think so. That is the key for the case of pharmaceuticals. We are not seeing sufficient earnings upgrades, which will continue to support their multiples. Stocks like Reddy's and all have already run up. And therefore, I think I'll continue to stay away on pharmaceuticals.
Okay. The other one is, I think, the dredging corporation. Can we just pull that stock up? Because the flashes just came in minutes ago, Tamanna. I think Mughal Agarwal's name, noted investor, came in the shareholding, and as a result of which, look at that spike on dredging corporation, 5% higher, 774 and counting. At times, these things move very, very swiftly. It's on a circuit, though, Vaishali. Difficult to call whether you can buy it today, because you can't even if you want to. But are the charts looking constructive?
Chart is looking very good. I think it's again, on a rising trend channel. So I would say 710 acts as a good support. It's also given a breakout about the short-term consolidation. So I think this stock is ready to head towards 800 to 850 levels to start with. It is a positive view.
Vaishali, just to close the loop on that pharma conversation we were having, any views on a Metropolis on the upside, a Laurus on lower side, Syngene, a Sun Pharma, etc. Any of these that you're tracking?
So, well, Metropolis, we need to have a follow-up buying, as I just mentioned. We've just seen a spike and it's showing a corrective move. But yes, having said that, the trend is still intact. But I am looking at DVs. To my liking, DVs, I think, is still holding well. And, well, if market continues to, if this stock continues to show the strength, I think 3,700 acts as a support. And in times to come, we can look at a target of 4,000 levels from here on. So not too confident about Sun Pharma or the other stocks, but DVs, statically, I do like this stock.
DVs is something that you like, and NTPC is the other one that I just want to quickly sort of address. It's, had an interesting sort of a move last few sessions down today, but mildly so, and off its days highs actually. Vaishali, are you tracking NTPC? Do you like NTPC right now on the charts?
Well, so NTPC, we had our target resistance of around 370, 75. So that's what we've done. Now let's wait and watch, because it needs to move past that to look for higher targets of 400.
Okay. By the way, a stock which has done really well is Ramco Systems. So I think today too, on the price and volume front, Ramco has shot up. And if you look at this week's chart, you will see what I'm talking about. It will probably be amongst the best performing small cap stocks. From a market cap of 1,000 crores, Ramco must be a 1,400, 1,500 crore market cap company in a matter of 2 trading sessions after winning that order from Korean Airlines. So look at that stock, 17% higher this week, 40%, market cap 1,400 crores. When the news flash came in on Wednesday morning, it was a 1,000 crore market cap company. Chakri, it's not a very large company, 150 crores. We don't have clarity from the management as yet. But here's a company which put out a release that South Korean Airlines has chosen the Ramco suite. It was maybe a group suite and not just belonging to Ramco Systems. But they put out the release on the BSE that their software has been selected. I mean, does a 40% up move do it? Or could orders like this from large airlines be much higher?
Ramco Systems as a company has not done much in terms of its earnings growth over the last, let's say, a year or more. And, and therefore, any addition, therefore, client additions, that were big client additions, does, change its earnings growth rates for the next year. In terms of valuation, the stock is okay. So, we have to wait and see if this order system, how much of it will flow into the FY25 and FY26, and then take a call. But until then, I would stay away.
And by the way, people should also be careful with Reliance Infra. It's down another 13-14%. There are some people who might be taking a punt and saying that there might be a reversal too, who knows. But for today's second day on a trot now, Reliance Infra is down on very large volumes. Was down 20% in Wednesday's session. So that's the key thing. Okay, we shift tracks.
Shift tracks to what politicians are buying. I mean, I find this segment very, very interesting. And Alex is always there with different names and, what their portfolios are looking like. So today we're talking about what's in Dayanidhi Maran's portfolio. What did you find, Alex?
Did you find mutual funds, gold, car?
No. In fact, none of the above.
No.
None of the above.
A plane?
None of the above. Dayanidhi Maran. Let's talk about the candidate from Central Chennai. He's got a total asset or gross total value of assets standing at 7.8 crore rupees, and that is more than doubled over the last 5 years. But incidentally, what you see on the screen is his entire portfolio is in movable assets. There's no immovable assets in his portfolio. He's got fixed deposits to the extent of 3.17 crore rupees. That's grown from 2.3 crore rupees in 2019. And he had movable assets when he disclosed this of 7.81 crore rupees, which is essentially his entire portfolio. His taxable income was quite substantial, 2.91 crore rupees in FY23, and that is more or less stayed constant from FY19, where it stood at 2.6 crore rupees. He's got no mutual fund holdings, and in fact, he had no equity holdings either in 2019, but that has changed just a bit, and we'll come to that in just a second. But he's got cash of about 69,850 rupees. I shouldn't say crore at the end because it's in thousands. He's got gold of about 10.5 lakh rupees. But now we come to the investments into stocks. And here's where it gets a little interesting, because he's got quite a few names from the same stable. He's got Reliance Industries at 67.5 lakh rupees. He's got Reliance Communications that is worth a whopping 153 rupees. He's got Reliance Power, 465 rupees. We were talking about Reliance Infrastructure a short while back. That's worth 1,440 rupees. Reliance Capital, 49 rupees. Jio Financial Services, which I'm guessing he got when the split happened, which is worth around 8.3 lakh rupees. And finally, Indian Energy Exchange, which is the only other stock that he has that does not have the name Reliance in it, which is worth 8.2 lakh rupees. That's how things stand right now for Mr. Dayanidhi Maran.
Interesting, makeup of the portfolio for a pretty rich candidate, at least as is known. Thank you for that, Alex, and look forward to seeing portfolios of more and more netas on this segment as we continue our coverage ahead of the polls. But meanwhile, last few minutes of trade left to end up this week. It's been a truncated week. You're going to have midweek holiday next week as well. I want to come to Vaishali with what would be your calls to set up for trade next week, and is TCS on that list at all?
Well, we normally don't play results, though chartically it looks very, very attractive. But right now, the stock to my liking, which I feel has sustained all this choppiness, is IRCTC. If you have a look at this, I mean, there's so much of selling happening in all the stocks, but this stock is holding well. So I think that calls for an inherent strength. So 1030 would be a stop loss, and I would look at a target of 1100. And the other stock to my liking is Muthoot Finance. So have a look at that stock. It's holding well with 1600 at support. I think this stock can do 1740, 1750 from here on.
So, Chakri, last calls from you as well. And just to take on TCS, the result season officially kicks off in a bit from now. And it's quite clear that all things considered, corporate results are going to be the big driver. As of now, it's looking like we'll have a pretty decent Q4. Frankly, most of the business updates we've seen so far have been fairly good. Is that what you're pegging on? And any specific take on a TCS?
TCS, I think, will have a fairly no surprises, no negative surprises. So that's a good thing. US corporate, so which means it meets its numbers. There might be some amount of beat because of an improvement in margins. Now, going forward, the US earnings season has also started. It shows US companies' earnings are fairly strong, so which means order flow etc., to Indian IT services companies will continue to be as they are, so no negative surprises there. The one benefit that TCS and other IT companies can have is in currency going forward, helping them in their margins a little bit. So overall, I think, TCS, if anything, it'll be a mildly positive quarter.
Mildly positive quarter, we'll get to know in a few, maybe 15, 20 minutes from now. Just last question, really, and we're speaking about a clutch of gainers at the broader end of the spectrum. On the A group, Newland Labs, by virtue of the big report that came in from Goldman, is up 8%, and Entero is up in double digits, I think, because of the note that came in from Jefferies. So brokerage notes are getting some solid reactions. Vaishali, between the two, any chart, either of the charts that looks interesting?
Newland looks good. It's open with a gap up. So I think with today's low as stop loss, one can attempt to buy to look for a target of 72.50. So this looks pretty good for now.
Some of the other movers this afternoon, CDSL among them. CDSL is having quite a good day with decent volumes. That stock nearly 6.5–7% up. So is a Quest Corp, which is a continuation of the kind of up move they've seen. A Nuvama, again in the same, I would say, CDSL kind of a space capital markets related. I'd like to see what a CAMS is doing as well. So you're seeing a bit of a theme working up there. Yeah, CAM's not bad at all. Chakri, is this a space that you'd be interested in being in right now? Even Anand Rathi is actually not bad at all, about 3% up.
This is a space clearly benefits generally when the overall volumes are good in the capital markets. But outside of that, I don't see any specific triggers which will help them to improve their margins or improve their volumes beyond what the business is doing. So from that perspective, yes, CDSL is a kind of an expensive stock, so valuation is on its side. That's one thing which can help the stock.
Okay, Vaishali and Chakri, thanks so much for taking the time out and being with us today on the show. Really appreciate your time. About a minute left for the markets to shut shop. Remember, ahead of TCS numbers, Anand Rathi well too, but TCS in particular, and the commentary, we are about 1% lower. This is the lowest point of the day for the markets, by the way. This is despite the global markets not being too skittish, but yeah, maybe slightly worried, if you will. But pull up the heat map and quickly show what's happening in the large cap before we move on to the broader end of the spectrum. Very few winners, that's the problem, and a lot of losers. Not too many stocks with heavy duty cuts, but 3%, 2%. I mean, L&T is the 10th worst performing stock, and that's down nearly 2%. That tells you the quantum of pain in the reds in the session today. So a lot of red, very little green, most of the heavyweights too trading in the red. I think all of this compounds the problems, at least at the large cap end of the market, though a lot of broader end of the spectrum stocks too have done well. Just before Tamanna joins in, the market breadth should come up here, and let's see if it's worsened from where it was. No, not really, just about 2:1 in favor of the decliners.
Yeah.
Tamanna.
It's been a tough day, no doubt, and on the broader end of the spectrum as well. I think, Niraj, you could say you've seen that. Mid-cap stocks now looking like you're going to close in the red. I just want to pull up the sectors to give you an idea what's been worst hit, and it's pharma and healthcare overall, which have seen the most pain coming in, and a clutch of stocks driving that. A Sun Pharma today, a Laurus Labs, even a Gland Pharma, all of those counters. But on the other hand, Niraj, also a bit of a mixed bag, right? You had a Metropolis doing well, you had Syngene, etc. doing well. So both sides of it. PSU banks took a bit of a knock. I think I'm interested in seeing where Vodafone has closed finally. A lot of action in the last half hour or so. Look at that. Can we just pull up the chart for the day? And that's quite a story there of how Vodafone has finally closed up. Remember, Vodafone started completely with a knock over there, and quite a recovery from the day's low. The 10 to 11 rupee sort of band for the FPO didn't enthuse the markets too much, and right at the end you've seen that spike when you figured out who's actually willing to put in money in Vodafone. Some marquee names like Fidelity and JQG changed the story over there. Should we look at what's happening with Indus as well? Their fortunes linked quite closely And Indus Towers also seemed like an okay close in a broadly not very great market. One trend that I picked up right towards the end is a CDSL, Anand Rathi, Nuvama, CAMS, all of those stocks doing pretty well. And Archean also for a second and I think a third session in a row having a great day towards close. So these were some of the great stories. Archean Chemicals 7% up.
Yeah, come Monday morning we'll talk to Varsha, our colleague, about what's happening in the chemical space. But today, TCS in focus. So stay tuned because we will bring to you TCS results live, the analysis and the press conference a bit later on. All the top voices on NDTV Profit for you to know what the commentary is going to be like. And of course, thanks so much for tuning into this show. Keep on, stay tuned to NDTV Profit. We'll give you a sense of what the earnings calendar looks like in almost every show to keep you updated with all that's happening within the results season.